And we're recording. What's up, everyone? This is Dino from Santiment. I just wanted to jump on here and record a short video, or what I hope is going to be a short video, about what happened over the last 24 hours. And in particular, why or how we were able to recover so quickly from 29K all the way up to 34.1K at the time of the recording of this video. Now, this isn't going to be a comprehensive sort of overview of all of the metrics on our platform or all of the metrics that I've been looking at over the last 24 hours, because that will take a couple of hours. But I am going to be talking about three metrics in particular, which I think give a pretty good overview of the general trends and behavioral patterns that we have seen from Bitcoin and Ethereum stakeholders over the last day or so that shine some light on what exactly happened. So if you're interested in these and other indicators, make sure to check out Sandbase, app.santiment.net. We have more than 100 different on-chain social media and development activity metrics, not just for Bitcoin, but for Ethereum and 1,000 other different cryptocurrencies. Second order of business, this is in no means financial advice. You should always do your own research. I'm just going to be kind of showing some of the metrics for Bitcoin and Ethereum over the last 24 hours because there have been a lot of very, very interesting indicators, especially in their on-chain data. And always do your own research, and this is only for informational purposes. All right, so I'm going to be talking about three indicators, like I said: exchange inflow, network realized profit and loss, and the amount of MakerDAO liquidations, CDP liquidations over the last 24 hours. So I'm going to start with Bitcoin's exchange inflow. Exchange inflow, for those unfamiliar with the metric, is the on-chain indicator that tracks the amount of a particular coin being moved to known exchange wallets. So when you see a spike in exchange inflow, it means that more of that coin is being moved to exchanges. As a result, some people use it as a proxy for increasing sell-side pressure, right? So over the last 6 months, you can see several large spikes in Bitcoin's exchange inflow coinciding with either local price tops like we've seen here or local price bottoms like we've seen here and here. During the May correction, end of May correction, there has been a cluster, a wave of exchange inflow spikes, suggesting that a substantial amount of Bitcoin was being moved to known exchange wallets and indicating or signaling network-wide capitulation, weekend sell-offs, in general a pivot to a predominantly bearish sentiment, right? So these types of spikes are an outlier. I don't think that you need to be looking for these massive spikes in order for to look for something that can have a profound impact on the market. As you can see, over the last 24 hours, these spikes are relatively timid compared to what happened over the last at the end of May. However, I still think that they had an impact on the general sort of market-wide recovery that we've seen over the last 24 hours. So let's zoom in a bit, just so we can see it a bit more clearly. So over the last 48 hours in particular, there have been two sort of prongs or spikes in Bitcoin's exchange inflow. First of all, on Monday, as Bitcoin fell below 35K for I don't know which time in the last month, we've seen a first spike in Bitcoin's exchange inflow, suggesting that more and more holders were looking to migrate their bags to exchanges, presumably to sell. Especially when you see these spikes in exchange inflow during market-wide correction, I think it's fair to assume that a good portion of them is being moved to exchanges for a particular purpose, and that purpose is to offload their bags, take profits, and get out of the market for the time being. So we've seen first signs of increased sell-offs on Monday, and then as Bitcoin crashed below 30K all the way down to 29K, 29.3K, we have seen another slightly even higher spike in Bitcoin's exchange inflow. But these two spikes in combination suggest that over the last 48 hours there has been a concerted inflow of Bitcoin to exchanges, a concerted effort to sell BTC, take some profits as much as you can, and in general move out of the market. So the reason why these spikes in exchange inflow sometimes coincide with local bottoms is that they indicate panic sell-offs, oversold conditions sometimes, and in general a predominantly bearish sentiment and fear enveloping the market. So sometimes it can be an opportune strategy to accumulate when there's blood in the streets, right? So this is why, not just for Bitcoin, but for Ethereum as well, several spikes in exchange inflow have coincided with local price bottoms and short-term price recoveries. This is Ethereum for the last 3 months. Let's look at Ethereum's exchange inflow for the last 6 months. I mean, you can certainly see spikes in Ethereum's exchange inflow over the last 6 months coincide with local price bottoms here, 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 and then obviously over the last 24 hours. So let's zoom in a bit. This is what Ethereum's exchange inflow looked like yesterday. So there has been a lot of ETH moved to exchanges as Ethereum went, I think, below 1800 maybe? How low was it? Yeah, below 1800. So suggesting once again that a particular subset of Ethereum holders were looking to get out of the market and were fearing further corrections. So as you can see, previous times where we have seen these types of spikes, they have sometimes coincided with short-term price bottoms and price recoveries, especially if there is enough buy-side pressure on the other side. So if there's a rising sell wall like we're seeing here, but there's enough sort of counterweight on the side of a buy-side pressure, which we do see some clues or some signs of in on-chain data as well, it can suggest that these types of spikes in exchange inflow will be rejected and in fact mark a period of short-term price recovery. Now, like I said, there have been some signs that outside of people selling panically, is panically even a word? Outside of people just selling, there have been some signs of an uptick in buy-side pressure over the last 24 hours. But before I get to that, I also want to talk about Bitcoin's network realized profit or loss. So this metric tracks the overall ROI of all daily transactions on the Bitcoin network. So the way that we calculate this metric is that we take for each unit of Bitcoin the last time that it was moved, and we take the price at which it was moved at that point in time. Like for example, let's say that there was a unit of BTC that was last moved on February 21st. So somebody bought BTC here at the top here, unfortunate for him, right? And we take the price at which it was last moved, that unit of Bitcoin, and we assume that this was its acquisition price. Then the next time that that same unit of Bitcoin moves, let's assume that it moved yesterday, right? Right here at the bottom, we take the price at which it was moved then, and we assume this to be its sell price. So the difference between those two prices across all daily transactions becomes this metric. And spikes in this metric, like here, suggest that on average, all of the coins that are being moved on the network, Bitcoin that is being moved on the network, is being moved at a profit relative to the last time that they moved on the blockchain. And then yesterday, for example, this dip suggests that all of the Bitcoins or units of Bitcoin that are being moved on the blockchain yesterday were being moved at an average loss, or at a loss relative to the last time that they moved on the blockchain. So what it suggests is that these spikes would be indicative of profit taking, and these types of dips would be indicative of selling at a loss, especially when you see a coinciding spike in exchange inflow, which we did see yesterday. So there was a spike, a couple of spikes in exchange inflow, suggesting more and more BTC being moved to exchanges, and at the same time there was a relatively significant dip in Bitcoin's network profit loss, suggesting that coins were being moved at a loss. Now, this might not look like much, this dip here yesterday, but if we zoom out to the entire history of BTC, here we go, and we take a daily interval. What you can see here is that at the end of May, we've recorded the biggest dip in Bitcoin's network realized profit loss in history. So it was one of the biggest capitulation events ever. So even though these subsequent couple of dips in Bitcoin's network realized profit or loss, when you zoom into the last 3 months, they don't look all that massive. When you put it in a proper context, they are massive, and they are indicative of holders on average at these points in time, around several local bottoms, moving their bags at a loss. Now, obviously, this metric makes some assumptions. It assumes that all transactions on the network are speculative. They're buys and sells. So it's not going to be a perfect estimate, but I think it's a good gauge of the overall sentiment of Bitcoin holders and what was going on in their heads over the last 24 hours. So similar to spikes in exchange inflow, these dips in a coin's network profit loss can sometimes coincide with local price bottoms because it suggests panic sell-offs and oversold conditions, and as a result a potential for short-term price recovery. Now, I was talking about clues of buy-side pressure on the other hand, and in particular, what I was talking about is the amount of stable coins being moved to exchanges over the last 24 hours. So If you read some of my insights, which you can find here, you know that I like to keep an eye on the relationship or the dynamic between stable coins and Bitcoin, and in particular the dynamic between the amount of stable coins exchange inflow, or the amount of stable coins being moved to exchanges, and the price of BTC over time. So first of all, I'm going to show you tethers. This is ERC20 tether, the amount of tether being moved to exchanges versus which is in red, versus the price of Bitcoin, which is in purple. Now, even sort of a not a very close overview, you can already see that several spikes in Tether's exchange inflow have coincided with short-term or incoming price bottoms. It happened here, 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 here before the short-term price recovery, and then here at the May 23rd bottom. So why, right? What is the explanation here? Some on-chain analysts believe that when you see spikes in the exchange inflow of stablecoins in particular, what that indicates is that stablecoin holders are moving their stablecoin bags to exchanges in order to exchange them for more volatile cryptocurrencies like BTC and Ethereum, right? So it would be sort of a proxy, an on-chain proxy for an increase in buy-side pressure. Now, there's a big caveat here, and I wrote about this a few days ago, so you can go to Insights and check it out for more information. But there's a big caveat when you talk about exchange inflow of stablecoins, because there's more than one reason why you would move stablecoins to exchanges, right? Not only to exchange them for Bitcoin or whatever. There's also newfound arbitrage opportunities, which I'm sure there were a lot of yesterday. Staking opportunities. You can provide lending to margin traders. There are different ways and different reasons why you would decide to move stablecoins to exchanges outside of just buying back into the market. However, especially when they occur during these massive sort of price corrections, I think it lends some credence to the idea that at least a portion of these stablecoins are being used to buy back into the market. So this is what Tether's exchange inflow looks like. When we look at USDC's exchange inflow, we kind of see the same thing. Massive spikes in USDC's exchange inflow, and we have seen them coincide previously several times with short-term bottoms for BTC. And then if we look at DAI, same thing here. And finally, let's look at BUSD, another sort of relatively significant spike in BUSD's exchange inflow. Now, one other thing that we need to talk about here. Exchange inflow only shows you the amount of stablecoins moving to exchanges, right? What we also need to figure out is whether there is a sort of complementary outflow of stablecoins from exchanges, because in that sense, it would negate the spike in exchange inflow, right? For example, when you look at DAI, when you look at DAI's exchange inflow, there's a spike yesterday, right? However, if we look at its exchange flow balance, which calculates the difference between stablecoins in and stablecoins out of exchanges, it's pretty flat. So this would suggest that even though there was a spike in DAI's exchange inflow, there was a coinciding spike in DAI's exchange outflow, which is here in blue, suggesting that this is more indicative of arbitrage than buy-side pressure. However, if you look at USDC's exchange flow balance, what we can see is a more pronounced uptick in the USDC's exchange flow balance, suggesting that more USDC has moved into exchanges than out of exchanges. And if you look at USDT's exchange flow balance, you can also see an uptick to the positive side. So like I said, there are different reasons why you would move stablecoins to exchanges. One of them could be a potential uptick in buy-side pressure, and it's one of the things that I like to look for. You know, the pattern has been successful several times in the past 6 months, so until it's not successful, I'm going to be keeping an eye on it. All right, the last thing that I wanted to talk about is the amount of liquidations of different coins being used as collateral in MakerDAO CDPs. So this is something that we like to keep an eye on. I don't actually know how many people actually look at this data point, but we've been keeping a close eye on it over the last 6 months because so far it's been proven to work. So under on-chain data here, you can find MakerDAO stats for any coin that is being used as collateral on MakerDAO, and we scroll all the way down here to the collateral liquidation amounts. We're looking at wrapped ETH liquidations on MakerDAO over the last 6 months, and what you'll notice is that there have been several strong upticks in liquidations of CDPs that were being collateralized by wrapped ETH over the last 6 months, and very often they will coincide with short-term bottoms for BTC. Actually, let me move back here and lock the price of BTC. There we go. Go back to wrapped ETH. There we go. Now, yesterday, we've also seen a big uptick in wrapped ETH MakerDAO's liquidations, which once again was kind of, seemingly confirmation of this trend. Then when we see CDPs being under collateralized and as a result being liquidated, it suggests once again a maximum pain marker, a massive fear in the market, and in general can indicate a period of short-term price recovery. Not just for wrapped ETH, by the way. If you look at I5, we'll look at its liquidation amounts. We see the same thing. Is this the last 6 months? Yes, it is. So we've seen it here, here, and here as well. Several times in the past 6 months, we've seen it coincide with local price bottoms for BTC. And actually, if you look at Ethereum, there we go. Actually, I think it coincides even better with Ethereum's price, which makes sense, obviously. Here, 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 and then yesterday. Here as well, several sort of smaller spikes along the way. So this was another indicator that we've been keeping an eye on yesterday, because it's essentially showing massive fear in the market in general, an increased amount of pain that the market is inflicting on its holders and on its participants, and as such sometimes it can lead to, or it can coincide with, short-term price recovery. So these are the 3 indicators that I wanted to talk about in this video. I think this video is already, how long? 17 minutes? All right. I was hoping for a short video, but just no dice. I hope you found this interesting. Let me know if you have any questions or feedback in the comments. Like I said, this is a completely impromptu setup as far as the camera and the mic, and I wasn't reading off of a script, so sorry if some parts of it came off as rambling, but I wanted to make sure that this video came out before any major moves happen once again. So that's gonna be all I have for you today. Thanks everyone, and I'll talk to you all on Friday on our weekly stream at 4 p.m. Central Eastern Time. Take care and stay safe out there.